Take stock of the global handover last night. The US markets are currently being propelled by a huge rally seen in crude prices overnight, as well as in gold, as well as earnings from tech majors. Now, speaking of earnings, you had Snapchat report its Q2 numbers and daily active users were amidst there, which saw the stock tank sharply, around 9% down. So these results, if they're not up to speed, the market can really punish you. Let's remember the Nasdaq index has run up ahead of everything else this year, clocking fresh new lifetime highs almost every trading season on the back of massive expectations seen in the tech sector. So specifically today, we'll be looking out for Tesla, and as well as Microsoft, which will be putting out their earnings. For Tesla, this one's especially special because if they do well, they could now be part of the S&P 500. So they're going to be really focused over there. And let's remember, Tesla's also been making new lifetime highs. Elon Musk has entered one of the richest people in the world, all on the back of the huge shift we've seen in our energy consumption trends from traditional fossil-based fuels to electric, whether it be an automobile as well. Now, I spoke about oil rallying overnight, so two stocks very closely linked to that, Chevron and Exxon, and they lie in the Dow index, and they propelled that 300 points higher at the peak of the day, which then cooled off to around 150 points. But Chevron and Exxon both closed 7% up and 5% up, and they're index heavyweights, so nothing to be trifled with over there. So that's how the US market kind of shaped up overnight. Now let's move over to Europe, where they have their own set of triggers. The government over there has just proposed and approved another 750 billion euro economic stimulus package. So that's what's led to the Stoxx 600 closing around 0.3% higher, and most sectors and bourses were in the positive territory over here. Now coming down to Asia, that's where there's been a bit of a muted start across every major index, whether you want to look at the Nikkei, the Kospi, the ASX 200 in Australia. This is on the back of a weakening dollar, obviously rising gold prices, and so Asia Pacific stocks faced a bit of headwind this morning. Now, just specifically on oil and gold, crude is now firmly above $40. Brent is nearing $44, and WTI is nearing $42. So WTI closed at around 41.96. Brent closed at 44.65, so just shy of 45. Now, this has been the biggest rise that we've seen in recent times. It's also been the highest levels for both these oil benchmarks since early March, just before we saw the steep sell-off and the steep fall in crude prices as well. So we seem to be clawing back. Demand is still obviously a challenge. Aviation stocks are still taking it on the chin. United was down a massive, I believe, 5% plus yesterday on really weak Q2 earnings. So everyone knows that there's not going to be a sharp uptick in crude demand anytime soon because we aren't going to travel. But given that the vaccine apparently is around the corner with the Oxford vaccine and things like that, perhaps the outlook for oil is improving and inventories seem to be falling. Now we'll have to see what the OPEC does as far as cuts go going forward. And finally on gold, gold and silver both made a fresh high yesterday. Gold is at a 9-year peak, silver is at a 6-year peak. Spot gold rose to $1,842 per ounce, and this is its highest since September 2011 and on track to post its biggest gain since May. So gold and silver, precious metals, haven, just absolutely seeing no windfall in demand whatsoever because equity markets are frothy and that causes investors anxiety. So gold seems to be a safer bet, and silver, because it's lagging behind, even more so.